Hello, everyone, and welcome to this edition of Investing and Trading Live. As always, my name is Josh Lopez. It is Saturday, August 26th, and we're going to do a market recap today. We're going to cover the winners and the losers of the stock market this week. Great volatility in the markets. We had the Jackson Hole Symposium this week, Fed Chair Powell talking this week, and we'll cover some different stocks like Nike. We'll look at Nvidia. Nvidia had earnings this week. Dick's Sporting Goods had a little rough week as well. So we'll cover a couple of those major movers of the week and a major market index update. Before we do that, I want to welcome my guest. He's kind of a repeat offender now. It's good having him on the show here today. Luke Young, how you doing, Luke?
I'm good. Thanks for having me.
Yeah, it's good having you on the show. We've been doing this about every single week now, at least once, maybe twice, and we've been having a lot of listenership on the podcast. Make sure to subscribe to the podcast if you haven't. Smash that subscribe button or like button, and make sure you get notified with the bell every time we do a live episode. By the way, these are live, so you'll get an update when these come live. Each and every day we do a show every day. And then on Thursdays, typically we do 4 episodes. So we appreciate all the subscribes, especially a lot lately, and then also some of the comments. And we do appreciate also our 5-star ratings. So make sure to give us a rating. If you don't like the show, send me an email and we'll see how we can improve that for you. So that being said, I want to do a quick market update here, and I want to bring Luke on the show and talk a little bit about some of the stocks that we want to get into. But a quick market recap. And we look at the S&P 500 as a gauge of the market, and we look at the ETF every single time we talk about this. Closing the week at 439.97. Big drop on Thursday and a little bit of indecision on Friday, but yet closing positive on Friday. That's the S&P 500 ETF. The Dow Jones Industrial Average closing at 343.50. So that one a little bit better on the week. As far as less of Friday actually helped a little bit, and they actually got above the S&P did on Friday. So that one, same story, currently in that downtrend. Then we got the Qs, which is the NASDAQ, currently at 364.02 on the closing bell. So that one, same story. Big drop on Thursday. Indecision right away in the morning into the speech from Fed Chair Powell, and closing positive on the day. So that being said, the overall markets had really a kind of an indecision week, we'll call it, but yet positive on the week. So it was a big volatile week in the markets, especially for the Qs. Same thing with the S&P 500. The Dow Jones was the only one that closed down on the week. So a little bit of a difference there, not much of a correlation with the major markets this week. So that's your update there. The IWM, which is the Russell, also following suit to the Dow and down on the week, currently at $184 per share even. And same story, big drop on Thursday, but also lowering on Friday. So showing a little bit of a difference there. So that being said, S&P 500 currently year-to-date up 14%. And NASDAQ currently year-to-date up 35%. Dow Jones currently only up 3.6%. So that being said, Luke, we're seeing a little bit of a difference in the markets. Obviously, the NASDAQ, tech really showing a lot more strength than the S&Ps and the Dow. Now let's talk about a couple stocks that I want to get into here today. And we're going to start with Nvidia. And Nvidia had earnings on, I believe it was Wednesday. We are currently looking at a weekly chart, and really piercing up to about the $500 per share. We were talking about that on Friday. This is Nvidia here. Now Nvidia it hit the 4th largest market cap on a stock, which was about I talked about it yesterday, $1.2 or $1.7 trillion. So with Nvidia really surging this week, it was a positive week, closing near all-time highs, but not at all-time highs. What are you looking at Nvidia doing moving forward? Are you seeing the continuing strength with AI, or is some of their competitors going to kind of slow them down? What's your thoughts on that?
I don't really look into the news a whole bunch, especially with companies like Nvidia, the semiconductor industry. But I did notice the chart looked pretty good. So maybe when price drops down to an area I'm willing to buy, I'd look into it. But I could see it continuing to all-time highs.
That's interesting you mentioned that. It looks good, but you'll wait for it to come down to purchase at a price that you're interested in, right? So that's an interesting thought, because the public typically sees something really good in the market. And I bet that's what happened on Thursday when the market opened. It market opened roughly at the high of the day and just shot straight down and closed pretty much exactly at the low of the day. So earnings came in. The public probably was trying to buy as institutions, smart money was selling, and dropped it back down, which could be going into areas of demand like you're talking about, where you might be interested to get Nvidia at a cheaper price based on the price chart. So I like that Nvidia one there. I do want to look at a couple other ones here, starting with Dick's Sporting Goods. So Dick's Sporting Goods, we're looking at a daily chart for those people that might be looking on YouTube or something, but Dick's Sporting Goods dropped on the week from the highs, actually, roughly around 25%. Okay. Now, what are your thoughts with Dick's Sporting Goods? You know, they had the news came out and they were talking about theft was the cause of this big drop. Do you see this as a buying opportunity, or are you in more wait and see mode to see what some of these other retailers are doing?
It could be, but, based on where the chart is, it could have some more room to fall. So it's kind of one of those things, once again, you got to wait till an area you're willing to buy at, or collect premium at a place you'd be willing to buy at a lower point. But you can't just go buying stocks just because you like the company. That's how a lot of people lose money in the long term. I guess over time, the markets generally go up, but what if Dick's Sporting Goods drops another 50% in the next 2 weeks? You have no idea.
Mm-hmm.
So you got to wait for an area you're willing to truly buy at. And right now, I think it has some room to fall.
Okay, when you have a big drop like that, sometimes it's like trying to catch a falling knife.
Mm-hmm.
So based on the charts, if this always definitely could continue to go down. But, there could be some potential shorter-term opportunities. So what you're explaining is a lot of people just buy and hope. And as you mentioned, the markets are designed to go up. They just are. But it's all relative based on where and when that an investor or trader purchases that stock or investment. So, sorry about that. So with that being said, you mentioned collecting some premiums. So you're talking about options, right? Now they're designed to minimize risk. What are some opportunities you could use with options? Say, because quite frankly, Dick's Sporting Goods is at $111 per share. What if you wanted to buy some options with that? How do you think that leverage would help people that have less amount of capital? Say somebody wanted, 1,000 shares of Dick's Sporting Goods. How would they buy, and they don't have $111,000 in their accounts? How would they do that?
Well, each option contract gives you the power to hold 100 shares. So, is it 10-to-1 leverage? Is that the official number?
It can vary based on the contract and based on the leverage that you use.
So, with the same amount as one share, if you were to buy one share of Dick's Sporting Goods, it's probably going to cost you $111 unless your broker gives you leverage, which they might. Sometimes it's like 2-to-1.
Yeah, whoop-de-doo though, right?
Yeah, but you can get more bang for your buck with options. You could buy calls, which gives you access to each option having 100 shares and probably costing you pennies on the dollar.
Mm-hmm.
$10-20 a contract. I'm not sure what it looks like, but
you would have to look at an options chain to see.
You're having access to a lot more shares,
Mm-hmm.
but you have to take into account, your risk before you get in there, because leverage can be scary if you don't know what you're doing.
Well, yeah, and it's designed to minimize risk, and if you're able to get into a stock, like for example, a Dick's Sporting Goods, rather than buying 1,000 shares and tying up $100,000, 110 to be 111 to be exact, the option could cost you maybe only 10 grand of buying power, or 15 grand, maybe probably not less than that. We'd have to look at an options chain to confirm that, but with the market closed, it's not going to give us proper data here on Saturday. Maybe that's a show for next week, is go through some stocks and look at what it would cost to buy the stock outright or buy the option, and kind of go through that comparison for people, so people can understand that you can use less capital and be more efficient with a smaller amount of capital in the options market.
I think we should also mention too, like if you're just getting into this sort of thing, definitely go get education to know how to trade options before you get into it, because you got to know what you're doing in this industry, and it's not some trial and error.
Mm-hmm.
You got to learn from people that know what they're doing.
Yeah, I mean, and that's an interesting point, because I think I talked about this when I was going into some of the 3 pillars to successful in trading and investing. It's so easy to get into the financial markets. All you got to do is go fund an account, and people do that without the education. Well, think of your everyday job. You wouldn't just go and do whatever that you do. If you're a nurse, you wouldn't just go draw blood on somebody without the education and the skill building, right? Clinicals. If you're in the construction industry, you're not going to hop on an excavator and start digging without the education. And they even have, in that industry, they have apprenticeship programs. So they're learning from a journeyman, which is someone like a mentor. And that's what you need in the financial markets too. I mean, if you have the opportunity to find a mentor in these markets, definitely do that before you just go open an account and hope things work out, because quite frankly, it's probably not going to work out. And that's just the stats based on, you can Google the stats. So that's Dick's Sporting Goods. Let's take a look at Nike, since that was in the headline. I want to make sure we get our listeners what they're looking for, because we do have a lot of people that trade Nike. Same story, a very similar price chart to Dick's Sporting Goods, but really Nike from the highs of, looks like back in 2020, this market currently is down about 44%. Now, I'm a big Nike fan. I could get real emotional about Nike because I swear that's the only shoe that I'm going to wear. That being said, this could be a potential buying opportunity, or as you said with Dick's Sporting Goods, this could continue to go down. So we are currently in we'll call it a longer-term downtrend, but also a shorter-term downtrend on a weekly chart. What is your thoughts with Nike? What are some opportunities that you could see here on moving forward with Nike?
So you just mentioned Nike is your favorite brand.
It's a household name.
And it's something, most people would be like, oh, I want to go buy shares of Nike. I just got my paycheck.
Mm-hmm.
Most people get paid every 2 weeks, so I'm assuming part of their paycheck goes into their 401k plan or Roth IRA.
Mm-hmm.
So most people would go buy Nike if they liked it, right?
Yep.
But you just mentioned that Nike's in a downtrend in both longer term and shorter term.
Mm-hmm.
Nike has a lot of room to fall before it turns around.
Mm-hmm.
So if you go blindly buying Nike right now, you're going to lose your head until it turns around. Who knows when it's going to turn around? Nobody knows. But, this could drop same thing as Dick's, another 50% in the next 2 weeks. You have no idea. But right now, I would not be comfortable buying it.
Okay, so what if an investor is looking and has that same thought, and they feel, okay, this market could continue to go down? What are their opportunities, or what are their options in a down market?
So in a down market, you could short Nike. That would be probably the best idea for this chart. Or what I always tell people, if Nike's in a downtrend, go find another stock or index that you can invest in. If you can only go long, or if that's all you know how to do, that's in an uptrend that gives you that opportunity to get in right now. There's 2,000 to 5,000 stocks. I don't even know the actual number. Go find an opportunity elsewhere. Don't be following these big companies, big names, because that's how people lose a lot of money in this industry.
Got it. So that being said, you brought up a kind of an interesting comment there. So you said go find a stock that's in an uptrend and looking good, right? Well, I just pulled up WWE stock. Okay, so I'm kind of playing devil's advocate here. And WWE looking phenomenal. Weekly chart uptrend, daily chart uptrend, closing, actually hitting all-time highs again here this week on Thursday of $117 per share. Now, with a market that's just keeps continuing to climb, which means if someone were to buy this, they're buying high with the hope to sell higher. So what's your thoughts on that? Because a lot of people think, okay, that's the best way to go is find a stock that's doing really, really good and then get into it after it's already up.
Well, according to the chart, it continues to make higher highs. So, I mean, you could have been saying that a year ago.
Yeah, and I actually, if you go look at the archives, I was talking about WWE about a year and a half ago when it was down between $50 and $60 per share. And it was already starting that uptrend.
There's a famous saying out there in the investing world, trend is your friend until the bend at the end. So, I mean, is that a laughing emoji?
That's a laughing thing, yeah. We got a crowd laughing at that.
Well, I mean, it's kind of common sense. I mean, you continue in these up markets, these uptrends, or, the opposite, downtrends and down markets. It's going to continue on until it breaks to the other way. So, I mean, there's plenty of opportunity for this to grow.
So rather than a longer-term strategy, what do you think someone can do as a short-term strategy? Go down to a smaller time frame, or how would you do that?
You could go down to a smaller time frame, or you could do the option strategy. We always talk about the selling puts and, collect premium for waiting for a place you'd be willing to buy on WWE or any stock. But, I mean, there's tons of opportunities in any market. I'm just giving a few, but WWE looks like a pretty good chart. Way better than Nike.
Got it. Yeah, Nike's been beat up for a little while here. Okay, so those are the few stocks I wanted to look at. One last one that I want to look at that we talked about 2 weeks ago, and we had the difference in opinion, which was UPS. So every time we do the show, we're going to have to do an update on UPS. And currently, UPS is at $168.87 per share, which is at the lows from June, the beginning of June. So I believe I should have marked it on the chart. I believe when you said that they were probably going to have a rough week or it was going to start to go down, was probably near the highs of this current downtrend of in the end of July. So that being said, are we at an area of demand, or do you think this pivot here that we're at right now, do you think that this continues to drop? And this is just our opinion, by the way. We're not giving recommendations here, just strictly entertainment purposes only. But do you think we will pass this pivot and continue that downtrend, or are you going to jump on the Josh train and say it's going to go back up?
Well, looking at the chart, it looks like it's forming a downtrend, which by their news of paying the employees, I mean, it's probably bound to happen. But there's a key level right there at that low 166?
Right at 166.
I think when price breaks that point, if price breaks that point, you could start looking at shorting this market. Because you have a solidified downtrend at that point where this stock is creating lower lows and lower highs.
Okay.
One of those things, continuing on in a downtrend, you either get short by puts at an area you're willing to sell.
Okay. So what you would want to do then is once this does cross that 166 area, you're going to wait for price to have a pullback up a little bit into an area of supply. And from there, take that down to your next demand. And that's where you put your lowest risk, highest reward, and then highest probability entry points into the financial markets. And that is at or near a turn in price. So I like that.
I've got a stock, too, that's pretty interesting. Upstart, UPST.
UPST. So UPST is the ticker symbol.
So, again, I think you have to reiterate every time you mention something that this isn't financial advice. But
this is for strictly entertainment purposes only, mainly our entertainment, but hopefully you find it entertaining as well.
So this is a stock that's down 58% on the year, I think, or from the high of.
From the year would be from the highs. It's actually up on the year. But from the
okay.
highs, it is down 93% from the highs.
93%. So this is a stock that's gotten shelled, obviously.
Yep.
But if you look at a chart, it's actually in a weekly uptrend, and it's in a daily demand zone, which, for Josh and I, when we're trading supply and demand, that gives you an indication you can have a long opportunity.
It's been in this demand zone for a couple weeks now, hasn't it?
Yeah. So I just bought shares. There's a possibility it continues on down and I get stopped out for a small loss. But think of the potential on a stock like Upstart. It's down 98% from its highs. If you have any sort of leverage on this, it could be a very successful trade if you were correct. And if you're wrong, you get a small loss. You got to start thinking that way with most companies and stocks, I think. And I think this is a pretty good opportunity, especially for the listeners, to just kind of glance at.
That's interesting you say that. So now, for a regular trading investor that just, they go off news and reports and stuff, it says, here's from Newswire's news outlet. JP Morgan Chase adjusts price target on Upstart to $28 from $23 per share. Maintains underweight rating. So which is lower than the current price right now. So they're showing some strength there, but yet it's still lower. So it's not about what's in the news, it's what's in the clues. And that's where supply and demand comes into play. So if you see something like that, go look on the price chart and see if there is a inverse correlation to what they're saying and what the price chart is saying. And that might give you some opportunities there. So I like that analysis on Upstart there. Currently is in a, we'll call it a, it did actually drop from the supply zone. So it needs to break the supply zone first, Luke. So currently on the larger time frame, I do like this demand zone, bringing it back up to a potential $71 to $83 area. It's got to break that supply zone. Once it does, this could potentially keep going up.
Which, think of that, it's currently at $30. I mean, the next supply zone is you say 70?
71 to 83 area.
So just like UPS, this is something we can go back and watch, because you could be completely wrong, but if you know exactly what you're doing and have a plan before you get into any sort of investment or trade, it's a very good thing.
Yep. So I just put a line on the price chart where we just started talking about that. So we'll go back at this maybe in a couple weeks here, and we'll go now and analyze this and see what some of the opportunities were. So those are a couple of your stocks for the week here. We'll continue to do this every single week. Was the market update on these stocks. So the current market update on the week, it was actually up week, but very, very volatile, which is exactly what you want, especially with options. So let's continue to manage your risk, and when you have opportunities, take them, and that's how I like to close the show out. We will do a show, probably a short one tomorrow, and do some sort of topic tomorrow, and then we'll be back on Monday to do a market open, the opening bell, and then continue on that on through the week, and then most likely do a show. I believe we'll probably do it on Wednesday. We'll do 4 segments on Wednesday for you, and then we'll continue that market update as we go. As always, collect your profits when they are given to you, and protect your losses when they are small. Until next time, retire young, my friends.